Hi, this is Susie, and it is week 4 for our summer session of managerial accounting, and time has sure been flying by. So for Unit 4, I wanted to discuss budgeting. In this concept, it is a subject that can be fairly simple or fairly easy, but it's also a subject that can be complex. It's all on how you make it or how you and your organization want it to be. Purpose of budgeting, it's used for planning, control, set benchmarks or goals, and you use it for measuring progress. One thing or some things to remember about budgets, they must be achievable. Otherwise, they can be demoralizing if you set a budget that's not achievable and just month after month or time period after time period, if they're year after year, for instance, whichever, then your teams are going to be demoralized because you've set your sights on goals that you can't achieve. A similar example would be if you're a person that needed to lose weight and you set your goals on you were going to lose 25 pounds. No, let's even say higher than that. I'm going to lose 40 pounds every month because you saw on some magazine cover, if you did this diet plan, you could lose 40 pounds a month. Well, you're not going to do that diet plan. You're going to do your own, and so that's your goal. Well, I think most of us know that's not really an achievable goal, and it's definitely not a sustainable goal to do month after month. Maybe there is some crash diet you could do it 1 month, but it's not sustainable. So you're going to be really disappointed and really demoralized that if you've set that type of goal and you can't reach it. So similar with that, your budget needs to be achievable. Now, also your management, they need to be supportive, enthusiastic, and committed to these budgets. If you've set this budget and these are the guidelines that say your expenses were cut from last year by 10%, then your management needs to be supportive of those. You can't have your management team kind of complain about it and not encourage the employees to look for ways to cut their spending and cut costs as well, and expect it to be the goals achieved and be successful if the management isn't leading by example. And you can't use your budgets to as a tool for pressuring the employees or use them for blame. These are just, budgets are guidelines. They aren't, you can't use them as, blaming someone. It's not the budget that did something. Budget is just a report of what happened, or what you want to happen. So you can't use it to hold somebody at fault. This is what was set, so this is just what we need to achieve. So if something is going awry, then you need to look at that from a different way. You need to look at what caused that issue. Yes, you use the budget for a goal or tool for measuring, but the budget itself is not the cause of the problem. And for budgets to be most successful, you want them to be self-imposed, or what we call participative, and that's just, you want the people who are impacted by the budget to participate. The management from all levels to input. You want a team approach where anybody who's affected works together. So like if you say expenses have to be cut by 10%, have everybody have input, so that if you know this one area can't be cut by 10% because you've already been told that KG&E is increasing their electricity by 2%, then you know you can't go and cut electricity expense by 10%. That's not possible. So then work with as a team, okay, then we need to find another area that we're going to have to cut by 12 or 15%. They work as a team. Then everybody has to work together in setting what their goals are. Whether it's 10% or we're going to reduce everything, or hey, we're going to work together and increase sales goals. So by increasing our sales, then it's going to have these impact in these other areas. We also want to value everybody's opinion as they're contributing. Now, maybe everybody expresses opinions, but you can't do what everybody wants, but at least listen to everyone's opinion, take their opinion into consideration, and honestly listen and consider what everybody contributes. And understand that when those who are impacted by the budget participate in making the budgets, and it is what is quoted as self-imposed budget, the results are more, in general, more achievable, and you will have more accurate goals. You also, usually the morale will be higher and you'll have increased motivation because they set these goals themselves, so they feel tied to these goals, and therefore it's kind of a self-imposed pressure. There's a pride to know that, hey, this is something I did, this is something I can do, so I said I would do it, so I'm going to do it. Not Big Brother told me to do it. And so sometimes we get the attitude of, well, Big Brother said I'm going to do it, so no, I'm not. So that's why when their goals or budgets are put together by those who are impacted, then you have more buy-in. When management creates the budgets, it often deflates the employee motivation because they didn't have any participation. They didn't have any say of what was achievable, what wasn't. And so people often are like, well, you didn't ask me if this was possible or not, so you just figure out how to make it happen. I'm just going to keep doing things the way I do it. And whether right or wrong with that attitude, then that's just what happens, unfortunately. Often they set unrealistic goals. Management didn't talk to those doing the job. They didn't talk to those impacted by the budget, so they don't know what's realistic sometimes. They don't know if the labor time can actually be reduced 15% on the product line making widgets, but they know they have to cut expenses, so that's what they do, is they just go down the line and say, well, we're going to reduce labor time because we need to be more efficient. But since they didn't ask for input, then they don't know what's realistic and what isn't. And then it's also seen or interpreted that management doesn't have any respect for their employees because they didn't value their input. They didn't, want their contribution to their budget. So employees really feel that lack of respect because they weren't asked for their opinions or their input. There's different types of budgets. There's the master budget, and then from the master budget, which is the overall budget for the organization, then you usually have several different levels of budgets broken down from that. You can have a sales budget, a production budget, budgets for the inventory or materials, labor and human resources budgets, one called SG&A, which is your overhead or selling, general and administration budget. You have your cash budget, which you can track or project your cash flow. Then you have your financial statements, which you budget out, your budget income statement, and your balance sheet. And to show the flow of this, you would create your master budget. And so you start with, you have a sales budget, and from that, what your production budget would be. And with your production budget, you would have direct materials, your direct labor, and your manufacturing overhead budget. Then with that, your selling and administrative expenses, and then your budgeted income statement. And all of these would follow under your operating budget. And then your budgeted income statements then go to, or they kind of tie into your capital expenditure budgets, your cash budget, and then those flow to your budgeted balance sheet. And these fall under your financial budgets. And also understand that budgets can be segmented by area. Instead of doing one for the whole organization, you could do it by region. For instance, this organization, they broke down, it's Daimler Chrysler, and so they budgeted by geographic regions, and it's actually, Toyota, who has ownership in several different motor companies. And so you can see they're budgeting for their North America region, Asia, and their European market. And this shows what their value is by percentages and what they're budgeting for. They could have, did it all at once for each different company, but instead they're doing the value, breaking it up in the different regions of the world. And then one of the final ways, the last way I was going to show you budgeting that you would see, other than, you'll see the normal budget, which is just the organization as a whole. Then what I just showed you is where they break it down by region. Then in this case, they'll break it down by product line. For Smart Touch Learning, their income statement, they have their total company. Then they have their CD product line, where they are segmenting for CDs, DVDs, and e-learning. And here they're showing what the revenue is, expenses, contribution margin, and then fixed expenses, and then what this divisional segment margin would be. Then they even broke it down further by here is their DVD line, for their segment margin is $339,500. They want to break it down even further by having Excel DVDs and specialty DVDs. As you can see, is their sales revenue is $1.2 million. The Excel revenue is $960,000 and specialty is $240,000. And they've broke those down even more to what they call a divisional income statement. And so they've broken these down by their product lines and even their divisional product lines within, the divisions within that product line. So companies can do their budgeting, as I said, on a simple level, or they can make it very complex, breaking it down by product line and then even to the division, for different reasons, whether it's to break down to the parts level so that they can budget for various parts. They can budget their labor hours to know where they need to assign employees, or know where they're going to have problems with cost management, whatever reasons there are. So I just wanted to go through some examples of budgeting, because a lot of people just think, okay, budget, the company is just going to go through and say, here's your sales, here are your expenses, and that's it. But as you can see, there's a lot more tied to budgeting. The thought process of whether it's a self-imposed, and whether the management team and other employees participate in it, or whether it's directed by management with no input from the employees. And then there's the master budget, and what is driven by the master budget, all the different lines, different levels, such as the sales budget or the product line, production line. And then these examples that I brought you, showing how the companies can also do the budgets, breaking them down by the product line or the regions, or perhaps different stores. Trying to think. Some companies have the different stores. Let's say for like the Walmart Corporation, they have Walmarts and Sam's, and they have the grocery store. I forgot what the name of it is. So they may do the budgets for the 3 different stores, as well as maybe doing it the different regions. So there are different ways that they can take the easy concept of a budget and then make it very complicated. I hope this helps understand budgeting a little bit, and the different ways you can budget and different levels, and give you just some examples of ways that organizations can budget. If you have any questions, please get with me, and I can go over this or any questions that you have. Hope this helped, and we will talk to you later. Goodbye.